Hi folks, good evening all. Uh, a warm welcome to all of you for this particular webinar. First of all, I would love to thank you all for taking such a precious time out of your busy schedule for our webinar with Mr. Ramnath. So basically with the introduction, like we have a panel member, Mr. Ramnath, who is a executive director and a lead partner of my CFO. So he is basically having more than 30 years of experience in this particular field. Today, mostly the webinar will be all on how a CFO can find ways to reduce bad debts and DSO. So this will be the topic which will be most keenly told or spoken by Mr. Ramnath. So if you have any questions regarding any particular part of this webinar, there is a small chat box given below, that is to your right hand side. So you can just put in your questions via a chat directly to Ramnath or the administrator, that is me. Uh, so I shall give this particular platform over to Ramnath. Uh, Over to you.
Okay, thank you, Steffi, for a nice introduction. Uh, so today's webinar, we will cover some ways and means as to how CFO could reduce bad debts and also reduce the days sales outstanding, which is DSO. There is a growing expectation from CFOs in today's world to play a critical role in steering initiatives to reduce DSOs and bad debts. Many finance organizations have now started focusing on making high impact decisions in these areas. This webinar we will cover the ways to minimize bad debts across customers, starting from credit facility, setting up efficient processes and follow-ups and dispute management mechanisms, including automation processes. Whether it is a boom time where business is growing rapidly, or if we are going through a sort of a slowdown where we are fighting for survival, I think the importance of credit management and effective receivable management would always be there. An important aspect of this is basically the short-term survival in terms and also long-term growth for the organization. The efforts in controlling receivables directly would help in increasing the cash flows, reducing the transaction costs and operating costs. And we also save the needless time and effort that one organization spends in chasing the old dues. And eventually, of course, it will end up in improving the sales and revenue. So where do we start? We all have heard this many times that cash is the king. And once you run out of cash, the business would sort of come to a standstill. The maxim which one always follows is that sale is never complete till all dues are collected. It is not just enough that we dispatch our goods or complete our service offering to the client. The collection is equally an important part of the sales process. I think this is something which most organizations should keep as a general measure. Days sales outstanding is basically a KPI which constantly many CFOs keep tackling all the time. How long does it take for the customer to pay, or how long do I wait for money to come in from customers? So the time is basically directly related to the risk that we run of a bad debt or eventually some write-offs. So clearly this is, as we see, is an important area for most CFOs to focus. And so when we look at receivable management, I think it is important that we look at it more from a strategic point of view and not merely as a transaction management process. And it has to be an end-to-end approach, right from order to the final receipt of cash. We start with the policies and procedure for sales, looking at things like credit limit decisions. How do we manage our invoicing process? and even collection process. The whole ambit of collection management, how do we apply the receipts to the respective invoices, how do we manage the reports, both internal and external reporting, and analyze the receivable status, and finally, of course, how do we manage in the worst case the dispute resolution. See, these are the 5 areas broadly we would discuss today. So if we start with the first step, which is basically the credit limit decision, it is essential that we set a credit policy right from the beginning. If you are going to extend credit to a customer, we have to make sure that we inform them of all the details right from the beginning. Let's think about it like this. I mean, any game, we need to really state out the rules so that the customer knows on what basis do we sanction him a credit. I think it would be a good idea to set it in writing. Extending credit is not just a conversation with the customer, but it's more of a commitment. So we give in writing and leave no questions or queries unanswered with regard to the availability of credit, and on the basis on which we would be deciding the credit availability to the customer. So basically, it has to be a systematic process. In today's world, everything is transparent. So I think it is also necessary that when we extend the credit to a customer, we use clear, tangible figures. We also discuss with him and make it very clear to all customers that we use a very fair approach and no favoritism with regard to deciding on the credit period as well as the credit limits for each of the customers. So just to give an example, if we are looking at factors like consistent payment, if you are looking at the way the customer is going to grow business with us, we clearly spell it out right up front and how do we do the credit score, and which are the factors that will lead to reduction of credit limits or factors that would lead to blocking of credit in case of non-payment or delayed payments. So I think it is therefore essential that we make it very clear right up front. We have to be organized in our policy. It is not just enough that we are just systematic, but we also make it clear to the customer how do they go about getting credit limit established for themselves. So it has to be a step-by-step process where the customer will have to apply for a credit, and we use the clearly spelled out policies and processes or our entire method of arriving at a credit limit and communicate to him the total credit that is sanctioned, both in terms of the quantum as well as in terms of the credit period. This would make it much clearer and make sure that the policy is also visible to all customers, that any customer dealing with us knows exactly what basis we use in establishing the credit period and the credit policy. And lastly, also what is important in arriving at a credit limit is the risk factor. Looking at what sort of credit references that we get from external sources. For example, we could ask for some qualitative things like trade references to evaluate the amount of credit that could be given. Essentially, the trade reference will give us an insight into how the customer has behaved with other creditors in the past. Asking for bank reference is not a bad idea, where we could ask a reference from the bank just to confirm that there has not been any delays in the customer in terms of loan repayments, could give some indications of the financial stability. In some cases, even personal guarantee could be a good way to go, where a personal guarantee from the business owner or the promoters saying that in case of business default, they would be personally liable. This would come in handy in case of there are any serious default and we have to take any legal recourse. So these are some of the method. Another area could be also getting help of credit bureau reports, something like a DNB report or any external agency's report could be a good source to decide. I think the ultimate purpose of any credit limit setting or credit limit decision is to determine how worthy is the customer in terms of the credit limit, and secondly, gather information to pursue the possible delinquency. What method do we do when the customer turns up not honoring his commitment? The next stage, of course, is invoicing. I think nothing upsets a customer more than an incorrect invoice or an inaccurate invoices sent to him. This creates huge problem for both the customer in terms of getting the invoice rectified, as well as for us in terms of redoing the entire invoicing, and besides, of course, the loss of face. So essentially, we have to make sure that we have a robust uh, invoicing system that takes care of the required checks and balances. Make sure that we have all the compliances. When you say compliances, it is in terms of the taxes, other charges that are leviable on the invoices. Make sure that these are up to date, correctly charged. All the trade promotions and the discounts that we have offered are correctly calculated, and the terms of the contracts are clearly addressed in the invoice. So clearly, the invoice system has to be robust. And next comes the transmission of invoice. Make sure that the invoice is transmitted by multiple platform. Many customers respond to better in certain form of communication. Some may be more comfortable on an email or a mail or a fax kind of communication. Some would like a physical copy for the.
Or Thursday, any one day would be fine with you?
Actually
Basically,
require.
we will be sending you a resume for desk review. Once it is shortlisted from there, then only we will schedule an interview for you. So that will be fine with you, right? Okay. Okay. So give me some time. Let me go through the first round, and then probably we can go ahead for the face-to-face interview.
Yeah. Transmission and distribution of invoice is another important aspect. Uh, Basically, electronic invoice presentation. Uh, it could be a good area in today's world. Put yourself basically in the customer's shoes. Always the first approach is the customer's perspective. Think about if how we would like to be approached in terms of invoice transmission and follow-ups. Second is collection mechanism. Basically, make sure that we offer all easy payment terms and eliminate all the barriers for payment mechanism. So basically, making sure that the customer has all the options possible, such as EPF, electronic fund transfers, or sending, just posting a check across the office, or all mechanisms that would suit the customer's comfort. Basically, it's a question of helping the customer or making it easy for the customer to make the pay for the invoices. Uh, Another aspect of receipt processing is payment to invoice matching. This is something which constantly happens when there are either incorrect invoices, the credit notes or corrections in the invoices are not correctly reflected in the statements of accounts that is sent to customers, or we don't match the invoice collections received to the right invoices. So this is something which is extremely important to make sure that we set the rules clearly with the customer, that whether we're going to have a first in first out kind of appropriation, or we customer specifically pays for an invoice, or does he have a non-account payment. In that case, how do we apply those payments? But a timely application of the credits received or payment received from customers into the invoices and showing the correct balance is another important aspect of AR processing. So receivable management is basically helping the customer to pay by making it easier for them and making it possible for them to use different methods of payment, whether it is online, credit card, installments, or various other such mechanisms. The third aspect is collection management. How do we follow up? How do we proactively process or offer incentives for customers to make payment on time or even sometimes earlier? So essentially, it is about looking at methodologies by which customers could uh, proactively from our side, following up with the customer and offering incentives for early payment or even charges for delayed collections. Within the company, the other aspect is the workflow automation. So many times when customers collections don't come on time, there has to be a mechanism to block the customer's account for further invoicing or further dispatches or offering of service, and release of this credit block moment there is a commitment or a collection coming in from customers. Uh, yeah. So activity log is quite important, making sure that there is a workflow mechanism within the company to make sure that the information from the customer is communicated effectively within the organization, and these information are updated when we manage the customer's credit block. Another important feature is the use of reminder letters. I think one of the important things is what is called as a dunning. I mean, many times because of our relationship with the customers, we are a bit shy in sending a reminder where the amounts are not received on time. I think it is necessary for most companies to have a well laid out reminder letter policy or a dunning policy. What it does is basically, the moment you have an amount which is overdue, after a specified number of days, there could be a first letter which goes out to the customer spelling out exactly which invoices are outstanding and what credit notes are adjusted against those, and give him typically a statement of account to say that this is the amount outstanding from him, a polite reminder to say that this is amount due after adjusting the various credits. This would be the first step which will help the customer to react, force him to react or even follow up with a phone call in terms of making sure that the amount outstanding is clearly established. After say a few days, whether it is 2 weeks to maximum 30 days, once the amounts are clearly established, the reconciliation issues are sorted out, a second reminder letter, which could be a bit more uh, forceful or sternly worded in terms of following up the amount, could be sent. So again, the of these letters, of each of the reminder letter has to be clearly decided upfront. How we sound more professional in terms of sending those reminders letters. And even after the second reminder letter, if the customer does not uh, react or respond, then we would slowly move into the more legalistic kind of letters where we sort of force it into a way towards legal actions. So these are some of the steps which we need to do in terms of planning, even follow up of receivables from the customers. The fourth area is about reporting. Reporting is both to our people who are customer facing and as well as to the management in terms of exception reporting. Looking at the top 20 or the top overdues, there could be mechanisms set up to have auto email alerts to those who are responsible to collect. This would be a good reminder for the sales people or customer facing to follow the customers. Cash forecasting, cycle time analysis, and other dashboards, top management would always be helpful to clearly KPI reports like aging reports, the DSO, the normal KPI like the DSO, comparing that with best possible DSOs, variance reports, which has to be which can be used. Essentially, it is necessary that all employees concerned with the customers are well informed, both as well as overdues in areas. Last, of course, is the dispute resolution. If all these mechanisms do not work, ultimately we should not be shy of leading it to a legal course of action. Before we get into a legal setup, I think one of the things to do is first resolve all the disputes, things like not getting the proper credit for any deductions, or if there are any reconciliation issues, get all those resolved. Typically, chargeback processing is one thing which could be done in case of online payment or credit card payments. Also, internally have an automatic escalation process in the organization where before we take to us more legal or external agencies help, we have an escalation mechanism. And internally also have various tools for sharing the data of the customer before we talk to the legal external sources. So these are some of the measures one could look at broadly to control both AR as well as overall bad debts leading out of AR. So essentially, it has to be an integrated approach, starting right from the sales process to the cash collections to achieve the overall benefit. We can't reiterate the saying of cash is king. Efficient receivable management is all about keeping a very close watch on the cash flows. So this is broadly, in summary, my quick presentation on the subject. I will be now open to receiving any questions that you may have, and we can take this discussion forward. Thank you. You can type those questions, and I'll be able to see it and reply to those questions. Yeah, here is a question which has come from one of the participant. The question says that would not be sending reminders or follow-up letter uh, detrimental to the customer relationship. Okay. I think we always know that if a customer
Okay, Ramna, there's another question from Sundaram Raghavan. His question is, how can we fix credit limit to customer? Every salesperson wants to bag orders in big numbers. Some of the customer may not be interested in giving their financial, etc.
can you repeat? It's not clear. How regarding credit limit, you said?
Okay, the question is, how can we fix credit limit to customer? Every salesperson wants to bag orders in big numbers. Some of the customer may not be interested in giving their financial, etc. Question by Sundaram.
Yeah. Yeah, as I discussed earlier, we set out our credit policy right uh, and make it more transparent, saying that we have a, we have a very fair and a clear mechanism of establishing how much credit we offer to the customer. Then I think customers will not be will I mean we have to make sure that the customer knows that he's being treated fairly. So basically, if we have clear rules of establishing the credit score, for example, saying that okay, if the financial numbers are available, we could use those parameters to establish the credit numbers. Would be happy to. Uh, if not, we clearly can communicate to them that it is would not be possible for us to give extended or long credit of some security mechanism. So essentially, a clear, fair, and a systematic policy would ensure to share. Uh, yeah, here is another question which says that are there any other innovative methods for following on old spend ways of converting AR to cash? Or without recourse. Selling with recourse would be nothing but just financing the receivables for the temporarily till the money comes from the customers. And if the credit worthiness and of the customer is good, we could even do a factoring without recourse. Other method would be to use insurance, depending on how robust one's uh, credit setting mechanism and the credit policies are established within the company. Credit insurance company could uh, offer credit insurance policies, and there will be ways to protect our receivables via these policies. Particularly large amount, we could look at credit insurance as one of the mechanisms. Others things which are not very popular are what is called as receivable exchanges. This is not so popular, especially in commodity products. There are receivable exchanges where one could trade the receivables within the group of people who are willing to buy it. It is very similar to factoring. Of course, the use of lawyers in the right situation sometimes could be a good mechanism where we could uh, transfer this amount to collection lawyers who would follow up and could help in collecting sticky balances. So there are credit agencies, collection agencies. Again, the issue there would be to go for a reputed or someone who does not spoil the company's image, reputation, and we engage such collection agencies. So these are some of the mechanisms one could use to convert sticky amounts to cash. We have a basic credit policy draft. Well, I would say there is no real ready handbook which will straightaway give us a credit policy for all customers and all business. These has to be customer specific or business specific. Uh, but some of the broad principles which we discussed earlier uh, could be used while we establish the credit. As we said clearly, one is to have a clear policy right at the beginning. Uh, Look at what competitors offer and try and see we could somewhat match them depending on our own business policies. Uh, have a systematic policy that is seen to be fair, and we also make sure that this policy is visible to all the client to make sure that all customers are able to see the policies. Also communicate this policy internally with all the customer facing employees of the company. Uh, Things like looking at the credit reports from external credit bureaus, payment history, uh, past legal issues, collection, trade references, bank references are also handy, and any additional guarantee or security the customer offer. These are the various factors one could use for establishing a credit uh, facility for a client. And these are broadly the policy, aspects that you would consider while establishing a credit policy. Essentially, it is about focusing on credit management, shortening the payment terms, offering early payment discount where necessary, while at the same time having penalties for late payments, eliminating barriers for payment and offering various options for customers to pay, such as electronic payments or credit card payment, billing promptly, correctly, and also having various good mechanisms for transmitting the invoices to the customers electronically wherever possible, using technology to automate payment processing function and also improve the existing processes and automate more. Within the company, establish a billing dispute resolution process where all queries and disputes are quickly attended to and resolved with the customers. Also have some sort of a proactive collection process with an early intervention, sending reminders at intervals when amounts are due but not paid, having various stages of reminder letters. The first reminder basically establishing the amount outstanding, resolving all the disputes or reconciliation issues, and later go more into more stricter reminders. At all times, basically making sure that we have the eye on the cash flows and at all levels, whether at the senior level as well as at the operating level, people know exactly who owes us what and where the problem lies. So this is broadly the integrated approach in a credit policy draft one would address.
Yeah. Yeah. There's one more question. Yeah. A client delays the payment intentionally by citing multiple reasons, internal and external. How can we enforce them to pay on time without damaging the company's business relationship?
Yeah, the question was basically customers many times come with some excuse for one reason or another by not paying the amount. So how do we tackle such situations affecting the relationship? So here is where I think a clear reminder letter or a dunning process would help. What we say is, firstly, of course, our policy of making sure that we have a robust invoicing system, that we rectify any invoicing errors right up front, not wait for till the amount becomes due. And once amounts are due and all the amount recoverable are clearly established, we send our reminder letter stating clearly how the receivable amount is arrived at and follow up with the customer and resolve the issues when we do the first reminder letter, which I think most customers would not be offended. We are only discussing on establishing the right amount payable. And once that is done, the purpose is basically to make sure that the customer agrees to the amount outstanding and all the reasons, whether internal or external, are discussed and agreed or decided one way or the other. So I think it is absolutely necessary that we listen to the customer, whatever reasons they give for non-payment, put ourselves in the customer's shoes, and make sure that there are no open issues before we chase the receivable amount. I think this is absolutely important that we get established the correct account receivable balance with the customer at all times.
There were 15 something.
But so questions ne people who attended are okay.
Thanks, Ramnath. I think that was a wonderful webinar conducted by Mr. Ramnath. There was adequate information passed on from him to you all. Hope all your queries are also being sorted. If not, do write to us at srijit@weltree.in. Thank you.